Okay, what's the most tax efficient way to structure the purchase of Canadian real estate if I am not Canadian? I know again that's a bit general, but any thoughts?
Okay, if you're not Canadian and you're purchasing real estate right here, one of the things is normally what people do is they do set up a Canadian corporation entity, so that it's contained within that. And the reason for that is because the moment you're operating some of these real estate transactions, if there is an audit at a later date, your books and records are limited to the company records right here. If you set it up as a branch, or you personally own, or you have a business and you're setting it up as a branch, or the US corporation is purchasing real estate, then you're opening up your US books as well. That's one of the reasons, practical reasons, why people normally would go setting up a corporation right here. And they take the money out as dividends from the Canadian corporation. Cool. Any additional thoughts too?
Not on this one, but just to let the audience know that Canada has actually banned foreigners from buying the property in Canada for the next 2 years because of various factors, inflation and property prices going high out of the roof. Previously as well, and this thing came at the start of January, I think 4th or 5th of January, that's when this started. But previously as well, there are some additional taxes as well if a non-resident, if a non-Canadian wants to buy a property in Canada. So what Bala said that, if they are in a position to set up a corporation and buy it through the corporation, that is still possible and that will make sense.
Because previously they what they've done is they to reduce the foreign investments or foreigners buying real estate in Canada, they had the additional tax that was applied on the transaction. But even with that, they could not stop the investments. So now they decided to just ban it.
And is there a sense for how long this ban is going to remain in place? Is it a 1 year, 2 years, or they'll kind of wait and see how it goes?
My understanding is 2 years, right, Cole?
2 years, yes. They proposed it for 2 years unless they extend or reduce it. But for now, it's 2 years.
Yeah. Okay, so that is interesting to know. But going back to, once it's again permitted to do so, in the US, again, typically, I mean, there are exceptions, but one of the key reasons for using a structure to buy real estate would be to limit liability, because the US is quite litigious. And, if the tenant slips and falls, if there's some mishap, the foreign owner could be exposed personally to whatever the liability of the dispute would be. Is that also a common way of thinking through the process? Is Canada litigious as well? Not really. That's not really a concern.
Not the same as the US, though. It's not along the same lines, but still, that is a consideration when they set up the structure.
Right. And also in the US, we also coach our clients on not only being conscious of the income taxes, but also the estate taxes. So we help clients create what we call estate tax blockers, which would, not just help with asset protection, but with probate avoidance or succession planning. Is there similar structures and considerations from a Canada point of view? Is there an estate tax that you're conscious of?
So what we do is we get into, like both Colvin and I, when we're dealing with our clients, we get into proactive tax planning. Compliance is one side of it, but when thinking of the proactive tax planning, then we go generational succession of making sure that the younger generation gets the business assets as well as the assets of the company, as well as the family wealth is passed on to the next generation. As part of doing that, yes, we do get into the structure.
Okay,
and look at opportunities to minimize taxes. And we also use some insurance products to make sure that funds are available for them to actually pay the taxes when the time comes.
Understood. That's great.
There has been, sorry, Darren. Just to add, since it's again we're connected to real estate, so there has been more tightening on this sector, and there has been a vacancy tax which is added again by many municipalities. So if you purchase a house but you are not able to, occupy it or even rent it, then there would be a vacancy tax as well. So any of the users or audience who want to buy a property in Canada, they should be aware of this as well.
Okay, great. Thanks for that, gentlemen.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.